It's April of 2026, and if you own a landscaping business and you've ever wondered what it's worth, I'm going to tell you exactly what we see when we value these businesses, and I'm going to walk you through the latest update on valuation levels for businesses specifically in the landscaping industry for Q1 of 2026. I'm Carter Johnson, managing partner of Singleton Valuations. We're an advisory firm that specializes in CVA certified business valuations for landscaping business owners, as well as value enhancement work. We're also proud members of the National Association of Landscape Professionals. Now let's get into it. On a historical context, over the last few years, recent valuation levels for landscaping companies have fallen between 2 times to 7 times EBITDA and 1.5 to 4 times seller discretionary earnings. Now, if you're a smaller company, that range has typically looked like 2 to 5 times EBITDA and 1.5 to 3 times seller discretionary earnings. And as the business works its way up in size, for larger companies, that's coming in around 3 times to 7 times EBITDA and 2.5 to 4 times seller discretionary earnings. Now, the question we always get, why the spread even when we look at businesses that are the exact same size? And what that actually comes down to is the qualitative components. If you're interested in those, we've identified what that looks like across 8 different categories specifically for landscaping companies. And just stay till the end of this video. We'll let you know how you can get your hands on that resource so you can assess it within your own company. But for now, let's dive into what valuation levels look like for Q1 as of April 2026. Overall, we saw a significantly lighter quarter in terms of transaction volume compared to Q1 of 2025. Now, this was consistent to the softening we saw in the lending markets towards the end of 2025, with overall SBA transactions in the landscaping space down in Q4 of 2025 compared to that Q4 of 2024. So it's not a surprise that we're seeing the year open up with just a softer market, lower transaction count for 2026. That's really carrying over from that trend that we saw towards the end of last year. Now, what does that mean for you as a landscaping business owner? First and foremost, of the completed transactions that we're seeing, there's been a wider spread on seller discretionary earnings multiples and a tighter range on EBITDA multiples. Typically, when we see that in this environment, what that's telling us is there's more volume of smaller companies being acquired with larger companies waiting for a better market. So just keep that in mind. Now, let's shift over and talk a little bit about what we're seeing on the operations side and how that may impact valuations for landscaping businesses for the rest of 2026. As you may or may not know, at Singleton Valuations, we actually track various data sets that collectively feed into our 3 proprietary indexes. We've got our SV Landscaping Demand Index, our SV Landscaping Input Cost Index, and our SV Landscaping Labor Index. On the SV Landscape Demand Index, as we round out these winter months, we're really seeing demand being split regionally. It has been a winter that has had record snowfall in the Northeast that has contributed to just persistent demand for snow removal work, while at the same time, we've seen record high temperatures in Western region states, which has just totally decimated the snow removal business for those landscaping businesses. Brightview actually reported a 110% increase in their snow removal year-over-year comps. But again, that's one of the largest operators on a national level. And really, depending on what region you're in, we're seeing those pockets of demand be pretty spotty for that service line. So in addition to that, as we close out those winter months, we're headed into the big real estate months. And overall, we are seeing a soft market in the new residential construction, along with repair and upgrades, landscaping service demand. Keep in mind, this is generally attached to interest rates and what we're seeing in the residential market. So as that goes, generally, this goes as well. So One good piece of advice that we're seeing is just strong demand. Again, consistent demand for maintenance, reoccurring business, both stable in both residential as well as commercial markets. So how does that impact valuation levels for the remainder of 2026, specifically as it pertains to that SV Landscaping Demand Index? The biggest takeaway for you as a business owner, what we anticipate seeing is a continued focus on those businesses that have reoccurring contracts in place. That's going to be a priority among buyers. It's always something that comes up in due diligence. However, when you compare that to businesses that are more dependent on project-oriented work, those businesses with the project-oriented work are going to have moderate headwinds for the remainder of 2026. So it's just going to be part of the narrative that's more front and center for buyers in this given environment. So keep that in mind. Regarding the SV Landscaping Input Cost Index, obviously we're going into the busy season, and with that, the biggest focus is going to be on oil prices. As of this video, there was a ceasefire announced with the war in Iran. However, if that war continues, we anticipate seeing just elevated oil prices, obviously, versus if it's wrapped up, we'll see those prices hopefully come down, and that's going to be a big headwind as an input cost for operators, especially ones that don't have as much route density optimized. So again, no brainer there, but just pointing it out, and it is showing up in our cost index as a significant signal. Now, the other headwind, we're consistently seeing freight and logistic cost as a headwind for major suppliers, larger suppliers and distributors specifically, where they're just having to really pick up the increased cost for that freight and logistics component of their supply chain. However, we're seeing margin relief in the private label pricing from suppliers. So as an operator, if you haven't looked at private label offerings, be sure to check that out from your suppliers. You might be able to pick up some relief in terms of your cost inputs there. Now, the other component we're consistently seeing in our cost index is that the large suppliers specifically have already stated that they will be passing along those costs in the first half of 2026. So just prepare yourself for that. Again, look at those private label offerings as a potential area of relief. So one takeaway from this as it regards to actual valuations for businesses in 2026, the big component is going to be contract structure and how that's set up with both residential and commercial clients. If you are able to pass along increased cost to your customers from your supplies, those types of accelerators in contract language, that's going to be prioritized with buyers. Always a great thing to have. Check with your legal counsel. But again, buyers are going to be more aware of just an inflationary environment, and if they're gridlocked and going to have actual margins on jobs and all eaten away, or if there's room to automatically pass those along to customers. So businesses that have those contracts in place with those types of accelerators, that's going to do a lot of the favorable lifting in this type of environment. Regarding the SV Landscaping Labor Index, what we're seeing primarily is lower overall turnover, which is consistent with the broader job market. Less companies are actually hiring in the landscaping space, but there's also fewer employees leaving their employer. So some good news there. What we also know, March 10th, 2026 was the final receipt date for the new cap subject on H-2B worker petitions. And we do know that the H-2B visas reached the 33,000 cap for the second half of 2026. So overall, we anticipate the labor market to still be tight, but less, actual supply issues from operators in the landscaping space, just because employees aren't looking for better opportunities as much as they were this time, last year and even a few years ago. So keep that in mind. As it pertains to the impact on valuations, the big thing is companies that are less reliant on seasonal workers in this environment, they're probably going to see a slight premium compared to their peer companies. Permanent employees with long tenure, that's going to signal durability in the org chart. That's going to lessen an acquirer's worry of having to rebuild an entire staff, team, whatever it is. It's really just going to just signal durability in terms of operations for the business. So certainly keep that in mind. We'll keep an eye on it on our labor index side. All in all, that wraps up where valuations are for Q1 2026 for the landscaping industry. As I mentioned before, if you're interested in understanding those 8 qualitative components and how your business stacks up to that, there's a link below in the description of this video where you can go and you can download that resource. And of course, reach out to us here at Singleton Valuations if we can ever be of any assistance. And until next time, have a wonderful day.